Hello, everyone, and welcome to the first annual Europe Disruptive Investment Summit, where we look to bring together traditional family offices, disruptive technology, investment managers, and the disruptive technology entrepreneurs who are building a new future for the world. On this first day, we're looking to cover topics like the future of art and how disruptive technologies like NFTs, non-fungible tokens, are paving the way for what is, in my opinion, adding a huge amount of value back to the artists and to the creators. We're talking about decentralized finance and how the banking industry is being revolutionized by digital assets and blockchain technology. We dive into the metaverse, and which is the immersive three-dimensional internet, which in my opinion is creating a new and improved immersive internet that is providing the opportunity for anyone, anywhere to show up to any event, possibly for free, and also to earn income by participating in these events by earning non-fungible assets in the metaverse. We hear from entrepreneurs and investors who are focused on the mass adoption of digital assets, of disruptive technology, and how quickly they anticipate this adoption happening, which really is a convergence of disruptive technology. It's not a single technology that is, or single disruptive technology that is happening at one time. All of these disruptive technologies are converging at the same time, which is going to have an even greater effect on the population. We hear from participants of traditional financial institutions on how the financial institutions need to innovate or be left behind, and what they're doing to take into consideration everything that's happening with disruptive technology. We hear from the founders of several public entities that are providing exposure to disruptive technology through the public markets. We hear, we're going to be talking about how real estate, securities, commodities, and assets are going to be disrupted due to disruptive technology, and how family offices who are traditionally participating in these more traditional asset classes will be able to enter the disruptive technology universe, which is becoming more and more important. I'd also like to thank our sponsors. We have amazing sponsors for this event, including GDA Capital and Secure Digital Markets. We also have DFactor, which we're going to hear about as a very exciting DeFi platform. We have Aledium, a private bank focused on digital assets. We have the adoption of consumer digital assets, Axia, which is focused on creating a new reserve currency for the world, and we have Zignally, which is focused on creating a new trading platform to augment the capabilities of all traditional and digital asset exchanges. So with that said, we're going to be starting with a fireside chat with Chetan Mehta, who has a significant career that we'll hear about, bridging the gap between traditional family offices and disruptive technologies. So let's get started. Hello, Chetan. I'm doing very well. I'm in beautiful Capri.
Background setup that you have.
Thank you, thank you. You're in Dubai right now.
That's right. Yeah, I'm in Dubai.
Great. So Chetan, you've been in the family office universe for the past couple decades. Initially on the traditional side, and now starting to focus more on the alternative, the disruptive side. Can you tell us about your story and how you got to where you are? Yeah,
Right.
that'd be great.
For this opportunity and lovely to be here with all the participants. I come from a consulting and advisory background. So my initial career was with big multinationals like Ernst& Young and few other advisory firms. I to the family office side over last 4 years now. And when I started, the overall asset allocation was more traditional, so a lot of real estate and fixed income focused allocation. Uh, uh, as I joined, one of the intention was to how do we kind of have a very growth oriented asset allocation, and that's where we started building out a venture kind of an alternate asset portfolio for the family. So in that sense, I've been focused on the alternative side, where now we invest in startups, ventures, and last 2 years, I've been taking a deep interest in understanding the whole crypto and blockchain, technologies coming about, and how they are disrupting, the traditional businesses. And in that context, we are still learning. We are still trying to see how, from a family office perspective, we can start making allocations to that sector. We've started taking some small steps, like investing in the infrastructure side. So we've invested in Ledger, which is a crypto wallet, in some fintech startups, and then in a few cybersecurity startups for the crypto space. But yes, it's still uh, a huge opportunity in our view, and we are still learning and trying to understand, the whole landscape.
Thanks, Chetan. That that the families that you're investing with went from more traditional asset classes like real estate and commodities, and now you're thinking more about private equity and disruptive technology. It would be great if you could dive a bit deeper into that and perhaps provide some context into the actual percent allocations that you were previously thinking about with real estate, commodities, fixed income, etc., and uh, and now how you're thinking about the total portfolio allocation when it comes to, I imagine, still holding a fair amount of those more traditional asset classes, but starting to want to consider more of a growth mindset, as you mentioned.
Yeah. So, as I mentioned, the portfolio allocation earlier was largely fixed income and real estate focused. And, over last 2, 3 years, we've been trying to, add a lot of alternative and venture and, other asset classes as part of the allocation, which is now growing, and increasing as we speak. So from our overall allocation, we believe one third is still real estate, and then the balance we've kind of increased more the allocation towards alternative side, which is now roughly 15%, and we plan to bring it up to around 25%. And I think as we go along, we want to add a couple of percentages to start with on the crypto and blockchain side. I think what has also happened, Mike, is last 2 3 years, given the whole interest rate environment, there is not enough opportunities for family offices to really find alternative sources to invest in fixed income kind of assets, and plus with overall global geopolitical tensions, USD backed assets are also facing some challenge, and real estate definitely has been impacted post COVID. So obviously, family offices, have to kind of now seek alternative investments and give more importance to that as they build out a portfolio.
That makes a lot of sense. And we've spoken, at length about how the amount of fixed income available is not like it was before, which has created more of a demand from families to consider more alternative and growth investments. Can you dive into that a little bit at a little bit more length, and perhaps share the fixed income opportunities that you were previously exploring, and any context as to, or any additional context rather, as to why and how there's not as much availability for fixed income?
Yeah. So for most families, fixed income opportunities are more around bonds or fixed income, REITs, or also some kind of structured products that they would work out with private banks to yield some regular returns and cash flows. But I think with the interest rates really heading down, and I think those opportunities have not really are there, and in some parts of the world the interest rates are turning negative. So obviously that is creating very limited options for families to look out for yield opportunities, and especially going and getting into high yield assets is making the whole fixed income strategy also more risky from what it was a few years back. So I think these are the kind of challenges which family offices are facing today, and therefore you see post-COVID the amount of stimulus and the easy money available. Money is chasing riskier assets, which we are seeing today. Be it in equities or even in some of the ventures and the high valuations which we are seeing today. So I think that's what is driving family offices to also look at alternate services to really make decent yields on the portfolio.
Yeah, that makes a lot. So Chetan, you've worked with several families, both on the investment side and inside the family, and several countries as well. Do you think that this is a global issue, or do you think that families around the world are thinking about this, or do you think it's local? I wonder if you have an opinion on that.
No, I think globally families are at least looking at alternative asset class as a investment class and adding that to the overall capital or asset allocation. See, I think traditionally families were very happy with fixed income kind of, and they had little bit of equities, but alternative asset class, be it funds or ventures, was something which they avoided because of either liquidity, issues, lack of, kind of comfort with investment managers, or the longer duration of holding period, at least 8 years, 10 years. So therefore, that asset class was kind of neglected, and maybe it was only in few mature countries like US that you found families really investing in that asset class. But I think that is what I see a change. I deal with a lot of families in India, in the region. I have other CIO friends in Europe, and I think that's what the trend I see globally is where families are now really struggling to identify opportunities which can give them good returns and also kind of less volatility.
So in growth type investments and alternative investments, often rather than a fixed rate of return, like with fixed income, or a variable but somewhat predictable rate of return, like with like with gold or other asset classes that are meant to kind of match inflation or ideally beat inflation a little bit. Growth technology or growth investments or alternative investments are traditionally much more speculative and in some cases volatile. Although I guess it depends on the particular type. Where in theory you could collateralize tether on the blockchain and earn a fixed rate of return. But I would go as far as to say that a lot of families don't believe in that fixed rate of return alternative investment like tether on the blockchain. When considering a world of alternatives and disruptive growth investments, how do you navigate the market and consider where you want to invest? Consider whether you're going into public funds, whether you're going into DeFi, NFTs, private equity. Because I think you've touched on like personally, you've gone into a lot of these sectors. But how do you navigate the market?
Yeah. So I think what has changed few years is at least now you're seeing adoption of crypto and other blockchain technologies at least coming into mainstream, and there are a lot of financial institutions as well as a lot of funds or even public companies adopting and as part of the treasury management or purchasing bitcoins as part of that. So that has kind of led at least to some interest from families to look at it. But at the same time, I think that the challenge is obviously, as you said, how do you really navigate and find the right opportunities? And secondly, if someone because Bitcoin is a very in the sense wrongly perceived or in the outside world, while there is group who advocates the adoption of Bitcoin and how it can add as a store of value or an hedge, but still family offices are still when they hear about Bitcoin, it's the first reaction is to either stay away or it's something very complicated or it's very difficult to understand. And obviously they cannot factor or fathom the volatility where Bitcoin drops 30% intraday. Those are the things which kind of are still keeping the families away from investing. But I think from a family office standpoint, the way we look at it is kind of taking two steps back and looking at it from an asset allocation perspective, and then seeing, okay, this is our allocation, how much we want to have investment in a particular asset class, and then kind of start from there. And within that, also we try to mitigate the risk to see that, okay, how do we want to play the market? Is it through some public institutions, or is it through a fund, or is it direct exposure to some coins, or now as you to some as you mentioned, NFTs, DeFi, all of us getting now popular. And then of course reach out to institutions maybe like yours or others who are in the space, who are experts in the field, and kind of take their guidance inputs to kind of handhold family offices and help make those investments. So I think it is important that there is education because that's what I see. Family offices not really fully educated in this space, and if we have to make this whole alternative digital space more mainstream, then definitely these are the things that I think we need to do. But I would love to hear your thoughts actually, that when you talk to families, what are the apprehensions they have, and how institutions can really advise them and help them kind of navigate this space and present investment opportunities.
Yeah, good question. I think that it really depends on the family, their investment appetite, and their family history of investments. A lot of families that are, and I really assume that when we start working with new families, are going to be slow to uh, than banks and I guess traditional and institutions, but that they don't need to make quick decisions. They want the market plays out. A lot of families that we speak with want to enter the market by generating yield or by investing into the secret. So like into mining rather than investing into the underlying asset. So definitely families that are interested in buying the assets. I'd say that the majority also, considering safety, are and considering that you don't need to make immediate decisions, a lot look to get exposure to the market by buying and holding Bitcoin and perhaps earning a yield on their Bitcoin. But we're seeing an increasing number of families that we work with that have participated over the years, that have, anyone that's participated in blockchain technology and disruptive technology over the past few years has done extremely well relative to traditional investments. So as you've started to make a return, then you start to get more comfortable with the industries, with the participants in the industries, and ability to identify the right investment opportunities. So I think it has been happening slowly for families to participate, which I think is normal. But I think that as we increasingly push mainstream adoption of disruptive technology, a lot of the families that were conservative in the internet boom, I think are not going to want to miss out on this next wave of disruptive innovation. So yeah, I think that the investment appetite is starting to be more so. So reinvesting their profit from Bitcoin or from mining, or from their first forays into the blockchain universe, disruptive technology universe, into the next generation of disruptive niches within blockchain technology, like decentralized finance or like non-fungible tokens, and other categories like that. I should also mention that that there's I'm starting to see a massively increasing appetite for, because a lot of families are just used to public markets for their investments, and holding digital assets in a different account to what they're used to is just too much of an educational barrier to participate. So seeing organizations like Circle doing a SPAC with $15 million of revenue at a $4.5 billion valuation or some crazy multiple is, and also just the increasing number of SPACs in general, is showing the demand to participate with disruptive technology on public markets.
Right. But one question, Michael, which most families are kind of concerned about, right? One is the whole security and around it, the safety and security of holding the asset, and just that comfort around it. And second is also this whole talk of regulations and different countries taking different positions. So how are you seeing that, and how can we educate families on that?
I think that is a great question, and we're hearing from some regulators, some lawyers and executives, I believe later today, in a regulatory compliance and legal custody panel. I think that each country is and similar to the internet revolution. There were countries that adopted the internet, and there were countries that were slow to adopt the internet. And the countries that were fast to adopt the internet had most to gain from their country's adoption of the internet. I think we're going to see the same thing happen with blockchain technology and disruptive technology. The innovation will move to countries that are trying to be early adopters and not that are pushing the innovators away. I think that we have more strict regulations to go, which will push out perhaps any people that are looking to just get rich quick, or that are looking to take advantage of the innovation and the perhaps easier access to capital in the blockchain universe. But over time, I think that the regulations are going to mature, and I think that the companies that stick around will be not perhaps some of the biggest businesses of the world of tomorrow, but will have to have
Right.
So Chetan, we have enough time for one more question. I'd love to hear your opinion on where you see the future of disruptive technology and family offices, and how quick are they going to, how quick are more going to participate, and how do you look at the future?
I think it's, we are very interested in exploring opportunities in this space. I think if you discount the volatility associated with crypto, but I think understanding the blockchain space and how they can really impact family offices, maybe in various areas like say art, where you could have NFTs or tokenization of art, or you could have real estate where you could have smart contracts, where you could have various ways of again tokenization of real estate. I think these are the areas where we feel there is huge opportunity. Plus the whole lending and banking space could really have a transformation with the whole blockchain space. And we are also seeing how in the whole supply chain logistics, blockchain can play a big role. So we are looking at opportunities in this space, and definitely something which we will invest going forward. Okay, I think there's some problem with Michael's computer. So thanks the team for organizing this and having me. It was a great chat with Michael, and I hope all of you enjoyed it. So thank you, and take care.